Before we go into today's topic, I'd like to comment on the video series as a whole. This is the 9th video, which began in November 2008, when we were pretty much in crisis mode. Over the next almost 2.5-year period, we went through one of the worst downturns since the Great Depression, followed by the strongest advance since World War II. The S&P officially doubled from the low, and the NASDAQ is at its highest point since December 2000 as of April 27th. And if you review all of the videos that I've done, I hope you understand the key theme that I try to emphasize is that in most cases, it's not so much investment performance, but rather investor behavior that will be the difference between success and failure. Watch all the videos again, and you'll see this pattern. Thanks for all the wonderful feedback you've given me, and I will continue to make these videos every quarter to keep you up to date on current market trends. Okay, now in this video, I want to highlight how our world is dramatically changing and the global opportunity that exists for investors today. In the past, much of the world's population just found it challenging enough to meet basic needs such as food, shelter, and water. But in 2006, for the first time ever, The Economist magazine said that more than half of the world's population were now considered middle class. What this means is that instead of just struggling to survive, the new middle class is buying clothes, cell phones, appliances, and many other products that we in the Western world take for granted. This first chart gives you some idea of how this middle class is expected to grow until at least 2025. This growing middle class equals opportunities for investors. Traditionally, spending by the middle class has been highest in Western countries. However, over 80% of the projected growth in demand is expected to come from Asia alone. Did you know that according to the International Labor Organization, Asia has more consumers than Europe, North America, Latin America, and Africa combined? Here's the potential. The blue bars in this chart shows the market penetration of different products and services in a number of different countries. The gray bars show the potential increase in consumption based upon population. For illustration purposes, the U.S., which is considered a mature market, has 82% of the population owning a car and 89% own a cell phone, according to data compiled by the World Bank. There's a little debate that the sharing of information has made our world more connected than ever. This is driving the demand for product and increasing the speed of commerce. And companies all around the world are being linked together. The iPhone is a good example of the sum being greater than the individual parts. A truly global product selling more than 200,000 iPhones a day for the first 3 months of 2011, a staggering number. This product is engineered in the U.S., manufactured in China, and has parts from all around the world. Look at the supply chain that goes into this global product that is in such demand today. We have companies from South Korea, Switzerland, Germany, Taiwan, the U.S., and Japan, all involved in the production of this smartphone. And it's not only technology. We're seeing global growth in all economic sectors, from agriculture to basic materials to infrastructure to energy to retail to medical to utilities to consumer products and on and on and on. Now, many companies that are traditionally thought as American are already taking advantage of these global opportunities. Here you see a list of some well-known S&P 500 companies that generate more than half of their revenues from outside the U.S. In fact, according to Ned Davis Research, approximately a quarter of all the S&P 500 companies generate more than 50% of their income from outside of the U.S. This is where the global opportunity exists. Statistics show that Americans have historically preferred to invest within their own borders, probably due to the familiarity of the U.S. companies, products, currencies, and our markets. However, as an investor, you want to ensure that this bias doesn't prevent you from exploring other opportunities. At the end of 2009, the U.S. has shrunk to less than 1/3 of the world's equity investments. So investors that limit investments to the U.S. may, in fact, miss out on attractive opportunities around the globe. There's little debate that the next decade is sure to be a time of considerable change as people, businesses, and economies around the world become more connected. Call me to see if your portfolio is properly positioned to take advantage of the global opportunities that exist in the marketplace today. And as always, thank you so much for watching.